Vetiva, in its 2024 Sub-Saharan Africa Industrials Outlook, says rising energy costs and other production inputs could also lead to price increases, even if competition remains intense in the cement sector. However, they note that the infrastructure development drive for economies such as Nigeria, Ghana, and Kenya pose growth opportunities. Abigail Alabi, an Industrial Goods Analyst for Sub-Saharan Africa at Vetiva, joins me now to unpack their report. Thank you so much for your time today, Abigail. And let's just get into your outlook. I see that last year we had quite a cocktail of headwinds play out in the sector. And would it be more of the same this year?
Hopefully not. I mean, last year we had a lot of challenges facing the cement industry. The currency redesign also affected demand. We also saw the increase in rainfall as well, also dampened demand, and also the transition to a new administration also caused a slowdown. But I mean, this year we see that this new government is increasing its focus on infrastructure development. I mean, we have seen the creation of an infrastructure fund by this new administration. So that just shows that they're increasing their focus on infrastructure development, which in turn drive volumes for cement producers as well, and also affect their revenue to their financial performance for this year.
Right, let's look at first across Africa first before we come back home to Nigeria. And in terms of volumes, what's your call on what we'll see play out this year?
I mean, last year, Pan-African volume did significantly well. We saw the likes of Ghana, Senegal, and Ethiopia, and also Cameroon also deliver strong volumes in the area of cement because they had a lot of infrastructural development going on in that segment. So we expect this to still continue this year and also impact the operations of cement industries or cement players that are domiciled in that segment, like Dangote Cement as well. So we expect the developmental or the infrastructure development in that segment to drive revenue or volumes for Dangote Cement and other cement players in that space. Yeah,
bringing it back home now, we're seeing that 2024 budget, 28.7 trillion here, and I'd like you to speak to the implications for the construction sector here.
I mean, we saw like a slight increase in the budget allocation for infrastructure development. However, there's still some little constraints to that, or there's still some challenges that may also affect the full implementation of the earmarked amount for the capital projects. One is the increase in required expenditure, and also all signs point to the fact that they will almost likely review the wages for government workers by this year, and that would also cause an increase in required expenditure and also affect the full implementation of capex. Also, the increasing debt profile of Nigeria is also one of the key factors that will also constrain spending or government spending in this year, and also the fact that the foreign currency, or we are experiencing currency volatility, which also affects most of our FX denominated loans, and that will also cause an increase in also our debt service charges as well. And all of these factors combined will definitely impact the federal government's ambition to increase infrastructure. But nonetheless, we still expect some sort of effort from the current administration to, in a way, spur or drive infrastructure development in this year.
Let's get to the companies you cover here in this hard market here, and I'd like to get your thoughts on what we can expect from the full year numbers.
For full year numbers, I mean, for Dangote Cement and Lafarge, they have been very, very proactive in also driving cost control, especially for Lafarge. Over the last few months, we have seen the fact that Lafarge and Dangote Cement are increasing their adoption of alternative fuels in most of their plants. We've seen most of these companies or most of these players switch from fossil fuels to alternative fuels, most especially natural gas for production and also for distribution. So we expect this to continue in the coming year. Also, like I said, the fact that the new government is focusing on infrastructure development to also in a way drive volumes for Dangote Cement and also Lafarge and other players in the industry. And also pricing still remains a driving force that we expect to be sustained in the coming year, given the fact that the cement players operate in a very, very high cost environment. So they will need to increase prices or at least stabilize prices to be able to mask those rising costs and also protect their margins.
Yeah, because when you look at the volumes in country here, in terms of expansion plans, I know some plants are already on board. I think Boa, they're going to get one of their plants commissioned very soon. What's the lay of the land looking like in terms of the volumes we're going to expect going forward?
Okay, so for Boa Cement currently has a production capacity of about 11 million metric tons. So, and they also plan to also commission a 3 million metric tons at Obu and Sokoto. That's going to increase the production capacity for Boa to about 17 million metric tons. And once that happens, we'll most likely see increased volumes for Boa Cement. And even though they are planning to reduce their prices, we'll still expect that the increase in volumes will offset this decline in price and also sustain their performance in the coming year.
Yeah, because when you look at what's happening in the market here, expansion is quite needed when you look at what we need here. But pricing is also a very critical part of what's playing out here. And are we going to see price wars play out this year? Earlier this year, we saw the POA group saying that they're going to leave their prices at 3,500. And how sustainable is this?
So there's a general consensus that there's a worry over the long-term sustainability of BUA cement decline or reduction in pricing, because like I said, the cement players operate in a very, very high cost environment, and that's also been worsened by FX volatility and also inflationary pressures. So at the same time, market forces may not agree with BUA cement's idea or BUA cement's plan to reduce its prices, because the high cost will also definitely affect its financial performance, and also cement players need to protect their margins to be able to ensure that they be able to achieve some sort of profitability in the coming year. So at the same time, the market or cost is also going to be one of the key factors that may affect pricing in the coming year. So we expect cement prices to remain elevated next year because of the high cost that we are going to experience, the high cost that we're expecting to happen in this year. Yeah,
because Nigeria's Minister of Works mentioned that they were going to be moving away from the conventional use of asphalt and into concrete. And I'm trying to weigh the pros and cons in terms of what it will mean for the sector. Can you help me lay that out?
Okay, I mean, over the last few years, there has been a clamoring for the use of concrete road because of its durability and also the long lifespan. But there's the problem with using of concrete road is the high initial investment. And as a country, obviously, we obviously have a budget constraint, or we are having budget issues and also revenue issues. And as a result, we'll most likely not be able to accommodate this significant increase or this significant cost for concrete roads in our budget, because there are a lot of things that they are still struggling in the budgets, or there are a lot of things that the federal government still needs to take care of other than concrete roads. But I mean, the plan for concrete road is still in the works. I mean, the reps have already called for an investigation where it talks about the use of concrete roads. So should the discussion or should the negotiations favor concrete roads, we'll most likely see increased volumes for cement producers if the federal government actually plans to, or if the plans to switch the concrete road actually comes to fruition.
Yeah, because last year we saw quite a number of players in Nigeria leaning into exports, clinker across the continent. And what's your expectation in that space in terms of Nigerian exports of cement outside the country?
I mean, I know BUA Cement has been exporting cement over the last few years to Niger and also Burkina Faso. However, because of the recent war in Niger Republic, that border has been closed. So BUA Cement is still looking for other alternatives to export, or focusing more generally on Burkina Faso. And also, Dangote Cement is still exporting cement to other places that do not have, or that does not have other places that doesn't have operations. We previously used to export to Ghana, but recently commissioned a new plant in Ghana, in Takodi, Ghana. So we've seen Dangote create or have its operations in Ghana. I mean, other countries too that Dangote doesn't have operations, we still expect them to expand their reach into those spaces and also deliver export as well, and also gain foreign exchange too in the process.
Very, very interesting sector to look at there. But thank you so much for your time. Abigail Alabi is the Industrial Goods Analyst for Sub-Saharan Africa at Vetiva.